Good morning, everyone. This is Chrissy from Solstice ATR. I hope everybody's doing great on a Sunday morning or afternoon, wherever you are. This video, I will be covering a couple of different things for 2022 in the overall markets. I'll make it brief and short. Before I do get started, you can find me at Solstice on Twitter, Instagram. You can DM me on Discord. We use adaptive algorithm for trading with no bias other than to trade the charts in front of us. We use it for illustration. We're not a broker dealer. Past performance does not indicate future results. Use at your own risk, and the data may not be copied unless requested. So let's go to the next slide. And this is where I want to talk about a little bit in more details about the overall market and the transition. Is there going to be a change, or are we going to continue on the path of continuation going higher, or a small reset? Don't make the same mistakes as a trader if you did any in the last year or a couple of years ago. Make sure you learn from them. Don't have your impulses or your reaction or gut feeling as a trader or listen to news. The chart will tell you the story. Turn that box off. You need ground evidence to understand technicalities such as a moving average, support and resistance, supply and demand zones, profile, momentum indicators to keep you in line in the direction of those moves. If you are a swing trader or a day trader, and don't act on impulses unless you have a setup for a buy sell target in your trade. Second thing, the sectors I would like to cover. These are some of the ETFs. You can use iShare, T. Rowe Price, Spiders. It doesn't matter as long as you have an overall view of all the sectors that you can see what the market is doing in relationship to midterm and short term, and what instruments are moving up and what are not. We'll be covering some of these. Last but not least, what I want you to do is pay attention in your investment. If you have a long-term investment or a short-term investment or a midterm investment, it will impact you according to the volatility in the market. So number one, if you are in the short term, you got not much to worry than actively trade it. If you are in the long term, you have to actively position your trades correctly so you don't lose your principal, because there may be uncertainty in the future. Things may turn around. The Federal Reserve Board is pulling out $120 billion out of the market. By now till March, April, maybe there's no more support, or does the institution have it priced in? And you have to look at your life expectancy, whether you are 50, 40, 30, or 65 and above, retired and taking distribution of your retirement account. You have to make sure you preserve the capital you have and what the tax codes and limitations are for contribution and distribution, and limitation by minimizing your tax goals and making your account grow and your goals set up correctly. So as an investor, you have to know these things before you place money, whether you place it in real estate, you place it in the stock market, you place it in crypto or a fixed account. Make sure that it meets your goal. Let's first go by breaking it down step by step, like we said. And we're going to go back to this couple of these slides. I won't go all over them because I want to make sure you understand the different sectors quickly and keep it short and brief. Here I have the SPY, which is the S&P 500. We can see as of January last year, we had consolidation in March and February. Then we went a little bit higher in April. May, we had a little bit of a reset in June. We continued higher in August. September, we retested the July lows, but we didn't really test them to the dot. We reverse continued higher. And in November, October, November, December, before the rally, we had a W pattern or an M pattern which never failed. We came back to retest the prior November lows, and we reversed sharply, and we continued high, and this was the Christmas rally and the end of the year. Then we had a reset last week. Does this mean that small reset, whether we get a 2%, a 5%, a 6% reset, or is this a change in the trend? Because every time we tested the 50, we were able to support it. Here we broke a little bit down, then we continued higher. My eyes are usually on the 116 simple moving average to keep you in line in relationship to trend, and if that trend is broken. So that's the SPY. Let's take a look at the QQQ, which is the NASDAQ 100. I'm using the Invesco QQQ. This represents, from March low. As you can see, that was the low for the year, a little bit. Then we continued higher. This was the last year fib. Oops. Okay, I did something wrong here. Okay, we can fix this. Nothing major. We're going to go 2 years here on the chart, so we can see where it started from. We're going to go pick up a Fibonacci, which is a simple Fibonacci. I'm going to go to the January low. This is the January 4th. This is November. So the March low was actually the low for the year. We can grab it, extend it to the right, and this is our fibs for the year on the QQQ annual charts. So we're going to go back to annual instead of a 2-year. So we can only look at the yearly. We don't have to go further out unless we have to look at, the long-term levels where we can draw the channels and stuff like that. We noticed we continued higher. In May, we had a reset. We rallied up. We retested the July low here. Then we continued higher. And since the, November, December range, the NASDAQ was range bound, consolidating, going up and down, because there may be sector rotations from Apple, Amazon, Google, Microsofts of the world, the Netflixes, the Teslas of the world. So there is rebalance. They may be looking for value instead of, always positioned in the NASDAQ 100 or the top 10, 20 companies in the S&P 500. You can see that the volatility between November and December, we had the rally, we continued up, then eventually ended the year. We sold off. Friday was a high. Then we had that push up then we fell back down the last 5 days of the range since Monday, Tuesday, Wednesday, Thursday, and that's Friday. We tested the 116 SMA. Every time we tested the 116 has been found to be support on the NASDAQ 100. Does this mean that we end up filling this gap here? We have a small gap in the QQQ here, or do we reverse back to the upside? Trade what's given to you, have no bias, and make sure you understand the fibs behind the trading. Usually the 38 acts usually as support and the 50 for a nice bounce. This is your 200 simple moving average. Let's take a look at the Dow DJX. I'll use the X today instead of the Dow Jones Industrial Average. We can see that since the February low, I don't have it anchored, which is fine. We don't need to have fibs up. We continued higher. Then between, the June, May to September, we were range bound. Eventually, we broke up. We retested the September lows. Then in December, we had a small little rally. In the last couple of days, the Dow Jones Industrial Average, remember, it's got Microsoft, it's got Apple in it. And, it represents only 30 companies. So pay attention usually to the 200 SMA right now on the Dow to see if it gets support or not. Let's take a look at the small cap IWM. The value one is IWN, so that way you know the difference. IWM is the Russell 2000. There's the IW letter N is the value play. Pay attention to the difference in between them because each one acts a little bit differently. Since the January low, we rallied a little bit in February. Since February till December, we had a look up in November, which is this area here. We broke out of this range, this box here. We can create a box so everybody can see it. We're going to do this on this chart. So we're going to grab this area here. So we'll click it between here and this area here. We retested it. We're still inside that range. You can see it. We looked above, then eventually came back in. Does this mean there's going to be a change in trend? Pay attention to the Russell if it loses that 208 area. So that's very critical. Or if it breaks back above the 229, that's in small cap. I'm going to look at GBTC, which is the ETF fund. GBTC. That's the Bitcoin fund for /BTC. If people cannot trade Bitcoin, they can trade the ETF, but they have to understand that the technicality after the consolidation and the breakout to $58, that $57 area, 56.80, wasn't able to get the support. I consider this like a triple top, 1, 2, 3. You can call this 4 and 5, but I consider these are like 3 tops. Then eventually we fell back down in a regression down channel. This is a cross. This is what you call a death cross, when the 20 and the 50 crosses and it falls down. That gives you confirmation of a change in trend. As long as the 50 is above, this is still bearish. The 18 has to, the candles come above that 18 simple moving average, which is the midpoint for the Bollinger Band, between the upper band, lower band. I use an 18, I don't use a 20. So that's a simple one. It allows you to understand the difference where the momentum is to the downside or upside. We do have this gap here. If you can see, if I mark it, you can see that we filled a portion of this gap right here. You can see where it is. So a portion of it has been filled. So there's a little bit more to go to fill this gap. Does this mean it fills the second gap between here and here? It depends what the market wants to do. I'm just marking them to give you little references. So if you're trading Bitcoin, you know where the levels to look for in case you're going to get a small rebound. Or does this go back, to the $22 range and reverse back from the mean to the upside, or the 26? So that's BTC. Let's take a look at GLD, which is the gold sector. Gold sector has been range bound. It tried to look up and break out of this linear regression down channel on the long term. This comes from a couple of years ago. The high, we had a breakout here, false breakout. We eventually fell back down, found a level around the 165 area. We reversed back trying to break up, and we fell back down in range this week. It's going to depend on interest rates, what the federal board is going to do, and if they're going to reverse back to GLD or /GC in gold. Let's take a look at now like the CL, which is crude. I will use USO for crude. This is a United States oil fund. We can see that oil after the $45 range and the $52 range, it looked down, it consolidated for a while. This was the breakout, came back, retested it, broke out to $58 right here on the ETF. The barrel was around 85 for the CL. We fell back down in the range. We have this up channel. Very important that we do hold the 116 simple moving average for crude eventually to break up above that 58.60 here, which is this is the ETF. The other one is around the 85.50. If it breaks above there, we're looking to see oil maybe in $100 a barrel. This is a ETF fund, maybe around the 68. I'm not saying it has to. It can reverse back down like it did here, had a lower highs, then fell back in. These are higher lows. You can see them. This was the only one that broke above this one. Does this mean that it holds and continue higher, or it cannot get to this level in order to reverse back and break if the 18 and the 50 crosses here, that's a bullish sign for continuation to the upside. Your 18 would be the line in the sand to hold you going up on USO. So let's now take a look at XLB. I'm doing the ETFs today in my video. I put some of the fibs. You can see it looked up. It had a nice annual high. The material this week, it broke above last year's high and fell back in and range. The 18 simple moving average 50 have to hold it, and the 61.8 to continue higher, or is there a change in the sector? Let's take a look at XLY. We can see XLY in November. It looked up. If you consider that the November high, these are triple tops or an inverted head and shoulder. If this is the shoulder, this is the head, this was a shoulder. We looked down to the 38, broke up, came back in. Is this forming an M pattern or an inverted head and shoulder reversal? Pay attention to that 50 simple moving average, and the 18 has been broken. Does this mean we retest the breakout of this candle here in the 116 simple moving average? This is in the consumer discretionary. We can take a look at XLF, which is the financial sector. We can see that the financials has made an annual high this year and broke last year November high. So pay attention to the financial sector and the banking sector. Let's take a look at XLK. XLK is a technology company similar to the NASDAQ 100. It represents the similar to the NASDAQ 100, but this is more of a tech rotational fund. You can see as of March low, it continued higher and it created that W parent, tried to look up, and eventually that, since the NASDAQ retrieved back a little bit, we fell below the 50 simple moving average. We are in the channel, have to pay attention to this 163 and the 116 SMA or the 157 area to see if it holds or not. If we're going to look at now XLE, we can see that the XLE is the energy. This year, it finally gave us a breakout. Pay attention to these sectors. This is why I'm mentioning them to you, so you know which sectors are moving up, which sectors are not moving down. Let's take a look at XLC. We can see communication. Communication has been a little bit weaker since the August. It has came back down. We can put a linear regression down channel this way on it. See if it eventually finds a level to either come up and break up or come back and break down. We can connect these dots together. This is a down channel. I can connect this one to here, and you can see we are in a linear regression down channel. We have to pay attention to the 50 and 18 if it reverses back, because you have the midpoint right here, and the $73 is very important in XLC. We can take a look at the XLP, which we can see that the XLP consumer staples, we created an annual high end of the year. We had the Christmas rally, the December rally. After the reset, then we pushed above this week higher, created a new high. Does this mean that the 18 simple moving average holds it, or the 38 or the 50 fib? So that's on XLP. We can take a look at XLI. We can see XLI, the industrial. We can see that what's going on. It's been range bound since the May area. Tried to look up. I consider this a 1. I consider this as a 2. This is a 3. 3-time tap. Usually you tap, 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 eventually break it. But if it doesn't, it falls back in. Keep an eye on 50 Fibonacci and 61.8 and the 116 simple moving average. Let's take a look at XLU. XLU, my fault. We can take an XLU, created an annual high, end of the year. It came back and retrieved a little bit. So pay attention to utilities. Let's take a look at XLV. It's in the healthcare sector. We can see we looked up on an annual high end of December. Then we fell back in a little bit. Does this mean that the 50 and the 18 are broken? Does the 61.8 and the 116 hold us, or do we fall further down or not? And I'm going to do one more in the ETF XLRE. We can see that the real estate, we looked up end of the year, we're coming back. Does this mean there's a slowdown in real estate? The prices of homes are higher. We have to pay attention to the refinancing sector, the builders as well. If the prices of those homes are over evaluated, and specifically in specific areas, some homes are overpriced in California, New York, Chicago, DC, Florida. I'm not saying that each area has them, but there are certain areas that can give us clues when you can do refinancing and can't do refinancing. So this is some of the stuff I would look into. Let's take a look at ES. This is the S&P 500. We're going to break it down on a shorter scale. We're going to go down to 45 day. You can see on the 45, this is the monthly expected measured move. We looked in Monday to the annual high. We broke above it, looked above. We had 3 tops. We eventually fell back down. This is a very important 47.15 area, 47.12 to hold. If we stay below it, we have lost the 18 and the 50 on the 4-hour chart. That gray area is the overnight gaps, and usually the trading hours are the black areas. So does this mean, are we going to come back to this side of the wedge because it's creating an H? Does this H hold in this area, the 46.45, or do we reverse back to the top, or do we fall further down to the backside of this channel, or this one down here in this linear regression channel? You can see I have one here, gray one here. This is parallel, or you can use the longer time frame. You can see it's coming from March 23rd, 2020, this yellow channel. Does this hold or not in the S&P 500? Gonna do the NQ. We can see that the NASDAQ 100, I had this linear regression up channel, and this one here on the annual chart, you can see this coming from March 24th, 2020. We have broken that channel. Does this hold, come back and reverse back up, or do we fall back in that range and continue lower? Because this is considered a 1, a 2, a 3 look down. Does this find a support to continue back up, or do we fall through it? So that's on the NASDAQ 100. Let's take a look at now. I'm not going to do the Dow. I'm not going to do the Russell. We know we are range bound in the Russell. The Dow looked up, fell back in a little bit. It's because it does not represent the overall markets. And I want to do BTC. We can see that BTC is still in that down channel. We did the GBTC, which is the ETF. You can see that since that gap here, we do have a gap on the other side up here. I took it off. I want to make sure that we double topped here. We fell back in. The 47,215 is very critical for BTC to come above it in order to continue higher and fill that upper gap. If it's going to continue lower, my intention to look at this linear regression channel, look at it and say, okay, this is where maybe it can come back to that 2930 area, finding a support and bouncing back. The measured expected move on the monthly chart at the 0 line is this fib, and the extension of it is the 32. The 38%, you can see it is right here, and the 61.8 is right at 26.5, and you have a 50% right here. This is the annual chart on the Fibonacci for the annual charts, which is the high and low. You can see that it's blinking. If I put my mouse on it, you can see the annual from January till the December high. We look at the range in the annual chart and we anchor those fibs. Does this mean that Bitcoin can reverse and go up and fill the gaps? Yes, we're going to trade what we see, not what we think. And this is very important in trading the setups, not being biased. We go back to the S&P 500. You can see the levels. If I go to SPX, you can see that the range, I usually have those little, ovals when we are trading. If we take in options to the long side or short side, we're looking where the gaps are in relationship to where they fill. I had marked this last week in the video, and I said, be careful of this gap. It can come back and fill. We do have this area here. You can see it. I can put an anchoring on it, and you have this oval right on the right side because, we were talking about it in the group. And I said, this is the first level for the first target coming back down in case we fill this gap, which we already, tested. Does this mean the 116, because we're a little bit below it on the 4-hour chart, does this hold it? Or do we look back to the mean to fill this gap right here, which we can see if I extend it to the right, edit property, and I just go to the right like this and just change the dates, it'll show you where the levels are in relationship to where that oval is and that area of the pivot and the gap fill. We usually look for pivots, value area high, value area lows in a profile in relationship to price action. Does this mean that the S&P can reverse back up? Yes, it can. It doesn't have to continue lower. It may be just a little glitch rebalancing in the portfolios, people trying to figure out if they should be in the market or not. And from now till April, February and March, since the Federal Reserve Board is pulling money out of the market, are people going to contribute to their IRAs, their individual SEPs, the individual Ks? Probably so. The contribution is still going to come in, but there may be a little bit of shift in different sectors. I hope this video was helpful. Take care. Look forward to seeing you once again at Solstice. You can check our website or you can DM me on Discord. Remember, this is for illustration use. We're not a broker dealer. Past performance doesn't indicate future results. We use this for educational education purposes. And at the same time, the algos tell us what to do. We have no biased opinion. Take care.